Samson Williams. Samson is a crowdfunding advisor, and people often say crowdfunding rockstar who helps companies with doing the crowdfunding right. He's also the professor at several universities who teaches blockchain and blockchain crowdfunding to students that advancing our cause further to young minds. And last but not the least, Samson is also pioneer of space economy and one of the first people who are likely to benefit from the tokenized and crowdfunded future from the space. And with this, I welcome Samson to our stage.
There we go. Excellent.
Nice to see you.
Nice to see you as well, Boris. I was really engaged in the last session, and so I want to capture a couple of points. I think Michael Kessler, he summed it up well, and he summed it up best. At the end of the day, it comes down to data management. And so you're trading units. You don't need blockchain to trade these units. And so I forget the gentleman said, he says, let's talk less about the tech and more about the company. And so in this perspective of investment crowdfunding and blockchain and ICOs, STOs, TGEs, token generating events, when we talk less about the tech and more about the company, we can then focus on, is this business going to make money in the next 3, 5, 10 years? Will it be sustainable? Because if you take a shitty business and you put its unit, its of ownership on a blockchain, now you just have a shitty blockchain. And it's like, why did you do that? And so we really need to think about, since we're talking about investments, what is the business? Is the business going to make money? Is it going to be sustainable? Is it going to grow? Are you going to see that 100x, 10,000x over the course of decades? And so, of course, you can look at pick a business that you think is like, oh, Amazon, right? In 2001, it was trading at $3. Now the stock is up to 3,000. Could you have picked that? It actually doesn't matter if in 2001 you put it on a blockchain or a traditional stock certificate, and now in 2020 that didn't actually change the value of the share price. What changed the value of Amazon's share price is their infrastructure, is their business model, is the 13 or so other billion-dollar businesses, Audible, Zappos, Whole Foods, that they bought. And so just because you have a unit, a stock or certificate that's on a blockchain, that doesn't make that certificate or that bit of stock any more valuable. And so I really wanted to stress that, because Michael Kessler said it. You don't actually need blockchain to manage that bit of data, but you don't need blockchain to manage that bit of data of ownership, because then we can actually talk about, is this business going to be relevant? Is it going to be around? So I wanted to say that because no one wants to own shitty data. If you have shit coins, well, congratulations, you have shit coins. Having shit portfolio, just because it's on a blockchain, is still a shit portfolio. So I had to get that off my chest. And by the way, good morning. Super early in the morning here in wherever I'm at, Washington, D.C. But I was going to talk to you guys a little bit about investment crowdfunding. And so if you have a pen and a piece of paper, I teach at a couple of universities, University of New Hampshire School of Law, as well as Columbia. So I like to give people something to take away from this conversation. So the first thing I'm going to give you is 3 simple facts. Number 1, customers have more money than investors. I'm going to give you a moment to write that down, because it is absolutely true. Customers have more money than investors. The reason this is important is because who do you think pays back your investors? Who do you think, if you're an investor, who pays you back? It's actually not your business, it's their customer. So if you have Amazon stock, it's because Amazon stock is worth $3,000 or worth X, because they have customers who are buying their goods, products, and service. So when you're thinking about, hey, I'm going to raise money, you got to keep in mind, customers have more money than investors. And when it comes to crowdfunding, it's how do you connect those two? We'll get back to that in a moment. Point number 2, we touched on it a little bit. The future of capital markets is content driven. I'm going to repeat this again. The future of capital markets is content driven. And partially is I forget the gentleman who said it. We do need evangelicals. We do need celebrities to go out and talk about the businesses. I don't care what the technology underneath that denotes how shares are owned. Let's talk about their businesses. so that people can be like, oh, I want to invest in this business. I want to invest in that business. Excuse me. And so the future of capital markets is content driven, because when that business can go, when the pen company can go online and talk about this pen, and word of mouth spreads it, you're talking about it on social media, on Twitter, on Instagram, and then they follow up with investment crowdfunding opportunities. It's like, oh, do you want to buy into this business? So keep that in mind. That third point is raise money isn't earned. So if you're an entrepreneur, if you're a startup, if you're a founder, if you're an issuer, when you raise money, that's not earned. You actually have to pay it back. I want a 10,000x return. Your investors want a 10,000x return. And so it's like, oh, if you go out as a business and you raise $10 million, your investors are expecting $1 billion return. That's what they want. And so sometimes it's like, oh yeah, we're so excited, right? We're talking about blockchain, it's going to revolutionize the world. And it's like, but you run a shitty business. You're not going to revolutionize a shitty business. The shitty businesses aren't profitable. And so it doesn't matter how you denote ownership and said shitty, unprofitable business. It doesn't matter. You're literally just holding shit certificates or shit stocks, very similar to shit coins. So now that we've got those three things out of the way, let's talk about investment crowdfunding. So when we talk about investment crowdfunding, it's an issue or a startup. They want to offer an opportunity for the consumer, the crowd, what we call here in America, the investor, customer investor, the investor, to have a little skin in the game, a little bit of ownership, a little bit of pride of ownership in the business. And this is a big deal, because this is where, hey, what is the future of investing? Well, it is digital, but it's where businesses connect directly to consumers. There's a lot of conversation on the last chat about exchanges. And it's like, guys, I don't think you're really seeing the future of exchanges is happening on this device. It's happening on your mobile phone. The future of exchanges aren't NASDAQ. They're not Wall Street. They're not the Nikkei. They're WeChat. They're Baidu. They're WhatsApp. We're looking at where humans, customers, are going to be able to connect directly to businesses. And the medium that they use to connect to those businesses is probably going to be Facebook or Amazon. Because at the end of the day, if you're engaging in transactions, Amazon doesn't actually care if you're buying this coffee cup, this pen, are some shares in a business that is already selling you a good product or service on Amazon. So I like the last panel. They're like, oh yeah, the different stock exchanges, we're going to blockchain, da, 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 da. But I don't think they appreciate that the cell phone companies, Apple, etc., the apps that run on these, they also, when you digitize assets and you digitize records of ownership, those units that are going to be exchanged, are traded, anyone can actually become an exchange. And so when I say anyone can become an exchange, yes, there are some rules, there's some regulations, people be like blah, 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 blah. But you have to think about when you look particularly at Tencent's business model. And I think China and India are going to dominate the digital exchange market, where on one hand, you say, do I want to buy this good product or service, or do I want to buy equity or shares in the business who sells these good products or service? And that all happens seamlessly. That will all happen seamlessly on a common platform, on WeChat, on WhatsApp, on this app. Because again, when you digitize the services, you might be buying a good product or service, and then there's another button that says, do you want to buy 10% of the stock or X number of shares? We see this now when they say, do you want to donate to a specific entity or organization? That's just a regular old donation, but they're going to add another button that says, do you want to invest in the business that made the pen because you just bought this pen? And they're going to be able to fractionalize shares. You can already do this on Fidelity. Fidelity offers $5 exposures to FANG, Facebook, Amazon, Netflix, and Google stocks. Why this is important is because before, no one cared about retail money. No one cared about no one cared about customers. No one cared about what the customers of these billion-dollar businesses, they were not investing in the billion-dollar businesses. They were just buying their good products or service. And this is where when you talk about, hey, we're going to digitize ownership. Ownership's already been digital, and we may be using blockchain to make it easier for you to go to a point of sale machine, pick up a coffee cup, and then buy, in addition to paying for this coffee cup, also buy X number of shares in the business that made this coffee cup or produces the coffee. So that's the future when we talk about investment crowdfunding. It's customers have more money than investors. So we're going to turn your customers into investors, or call them investomers. Then through the future of capital markets being content driven, you'll see celebrities, you'll see people in your neighborhood who get on group chats, who get on Twitter and talk about, hey, I just bought this really great product. You should too. Here's check this out. And then they send you a link and you see the product, so you can buy the product, or you can invest in the product, in the business that made the product. We see this on Shark Tank, where they're like, hey, I'm Shark Tank, I make coffee cups. But then it's like, there's only 5 people who get to invest in the coffee cup maker or the coffee maker. And this is when you digitize stuff, things change, it moves at the speed of business, and everybody now has the opportunity to become an investor on their mobile device. So it's not saying that capital markets aren't changing, that investment isn't changing, but I think, forget the gentleman who said it, the adoption is going to be like that of email. It's going to go from here to hockey stick very quickly, where now more people are like, yeah, we no longer use the NASDAQ. We just, we go on Amazon, we buy, sell and trade shares of companies that we actually buy stuff in, because that just makes the most sense. So hopefully I'm not beating that too much to death, but it's very important, because you're going to hear a lot of hype like, oh, we blockchain this, we blockchain that. It's units of data. If you have a shitty business, you blockchain a shitty business, it's still a shitty, unprofitable business. And so the other thing, as we come to wrap up, I'm going to repeat this once, write this down. Assets on a ledger don't make the assets more valuable. Just because you put ownership of this pen on a ledger, it's still a pen. It doesn't make it more valuable. There's, of course, the hype. And you can look at it very similar, 2017 till now, to the early .com internet age. Humans were very excited. It's a lot of new technologies. They're like, yeah, we're going to get super rich. And then you have this thing called narrative economics that kicks in, where there are some people who do make a considerable sums of money, but they're very small. However, humans love telling the story of, hey, in 2011, my cousin who never had a job, he bought $1,000 worth of Bitcoin. And now in 2020, he's retired. He has $25 million. How can I do that? Well, that's a story. Humans love a story. The most profitable line in the history of mankind is once upon a time. And so once upon a time, someone bought X, waited a decade or more, and now it's worth Y. How do you get involved in that? So when you're looking at making investments, you have to think the hardest part of anyone's overnight success is the first 10 years, because you'll see all of the shit coins that came up in 2007, they flared, they burnt out. And I think that is great. That is phenomenal. That's awesome. Big round of applause, because we needed that education. We needed that outreach. We needed that awareness so that we could have this conversation. So for everyone who invested, like myself, I was just throwing ETH into different ICOs. That's great. Eros.io, they got me for a couple dozen ETH. They raised about $42 million, and then they disappeared into thin air. And that's just the sheep getting burned, early investors getting burned, understanding this new novel, not only technology, but asset. And then it's like, oh, it's a new novel technology, but it doesn't make the business or the asset worth anymore. And so the $26 billion raised between 2017 and 2019 in the ICO market is great, because that's really just research and design. It's, hey, how do we inspire new ways of doing business? It was said earlier, innovation rarely happens in traditional bastions of finance, but now all of these billions of dollars come into the blockchain market, into the crypto market, which spurs innovation. And this innovation has led us to this point here in America, where recently the Securities and Exchange Commission, they've raised the limits on how much issuers, how much founders, how much startups could raise using Jobs Act crowdfunding. So I'm 100% behind regulated crowdfunding. The traditional ICO market it's an unregulated market. Currently, when you fast forward to what you can do now, Popcom, a vending machine solution, they were the first company to raise $1 million in America using Reg CF. Reg CF is just regulated crowdfunding. In the Reg CF world, you can raise up to $1,070,000. They did it in 2018, 2019. Right now, they have a deal going on a platform called Start Engine where they're doing a Reg A Plus for $5 million. And in this instance, you're not only getting equity, Class B shares, you're also getting tokens that you can use in their vending machines. Then Block One came and they did a Reg A Plus. Block One did everyone a favor because they spent $2 million through their regulatory processes. So fast forward through 2017, the ICO shenanigans of 2017, 18, 19, I smile because I loved them. Now at 2020, we're going into a decade where assets are digital. They will be traded easier on your phone, not on a stock exchange. Think Tencent, think WeChat, think Amazon. And now people can determine, do I want to go buy this product and then also invest in the company that made this product on this device seamlessly? And so this is where we'll have a much frictionless time, a much more frictionless manner of doing investments in businesses as well. And I think I have 3 more minutes. So Jobs Act has been updated.
You actually have 5 minutes.
I'm sorry, what did you say?
You have 5 minutes.
Just I have 5 minutes. Okay, brilliant. I'm trying to stay on track. So Jobs Act, if you're still listening, we're talking about investment crowdfunding. It's going to be exciting because when you have Main Street businesses able to connect with their customers, it changes the game. VCs are going to have a shit fit. Hedge funds are going to have a shit fit. When these small businesses, again, the story of Dawn Dixon and Popcom, had the pleasure of meeting her when she raised her first $1 million in a regulated fashion using Reg CF, and then able to raise her second $1 million. It changed the terms of how she approached VCs. It changed the terms of how VCs approached her, because her as a business owner, she had what she calls "fuck you" money. If you don't want to accept my terms, fuck you. If you don't want to invest in these terms, fuck you. And fuck you money changes the way startups are actually ran, because now startups can get to have a greater control of their business. From the investor perspective, you love this because now you have someone who cares about, is my business going to be sustainable? And so you will see where fans, people who are passionate about certain good products and services, they're going to invest and invest heavily, which brings us back to the space economy. And so as we digitize everything, you can't take paper to space. This thing right here, it doesn't go into orbit. And so when you're looking at the future, this is gone. And what exists is the opportunity for fans, consumers, everyone to invest in these off-world opportunities. This is the 5th industrial revolution. And so that's super exciting, because finally you will see with the digitalization of infrastructure that customers can be directly connected to businesses in a more seamless way that the middlemen of exchanges never anticipated, because the cell phone companies, the app companies, are going to put them out of business. And so there will be some institutional shift. There will be some fighting over, oh my God, these unsophisticated customers, how dare they determine how to spend their own money? And so the institutional guys will lobby against it. Meanwhile, the customers, they will vote with their dollars. And so as you're looking for businesses to invest in, just ask yourself, what businesses do I use? What businesses' products make sense to me? And this is where we're really going to change the way investment gets done. There's a lot more things to consider. And I'm going to finally wrap up because I found my dollar. I'm going to talk about DeFi. DeFi is IP you don't own. You don't own any of the IP of DeFi. Look up Yearn Finance. I forget the gentleman's name. I think his name's Andrew. He owns Yearn Finance. Everybody using his version of a token, they don't own anything. So just because I have a dollar, it doesn't mean I own any of the US government. And so when you look at DeFi, DeFi is IP, intellectual property you don't own. And why that's important is because when we talk about revenue, if you're investing in a digital token of these things, you don't actually own the company. And so Ripple, for instance, they could drop XRP tomorrow and it not actually impact Ripple's business. XRP is just this sort of useless. It doesn't have, you don't have equity and ownership in that. So that's my final word. Keep that in mind. It's going to be a very exciting decade. And as always, you can lose all of your money, get divorced, break up, end up homeless. So don't swing for the stars. Spread your portfolios, keep learning, keep reading, and just approach every opportunity with an open mind. And remember, the hardest part of any sound investment is waiting that first 10 years for it to come to fruition. So my name's Samson Williams. You can find me on LinkedIn or the internet. Just Google Samson Williams. And if you're ever in Washington, D.C., shoot me a text or shoot me a Twitter, and we'll go out and have a beer, because I cannot wait to go back out and interact with human beings in social settings. So, Boris, any other final questions? Because I think I'm right at time.
I don't actually questions in the comment section. Thank you a lot for your speech. It was we have many people who's in blockchain space among speakers who suffer from the curse of knowledge, and they know stuff, and I assume other people know it as well. So they often may explain things too complicated for regular viewers, and I'm very grateful for you being very clear, very straightforward and simple in your explanation. And the point you made about storytelling is very mirrors everything that has been said before as well on these conferences, when people have been speaking on the panel about secondary markets, about the importance of having things people actually want, such as scotch or I don't know, horse semen.
Walt Disney has a billion-dollar empire based upon Once Upon a Time, and then they go from there. And so this is where, if you're gonna I don't care what your business is, you need to tell me a compelling story, so I want to give you my money. And if you don't tell me a compelling story, I'm like, I don't know you exist, number one. I don't know I can use your product, number two. And so you're just a shitty business who might have their stock noted on a blockchain, in which case you're a new shit coin.
Thank you a lot for your speech, and have a nice day.
Bye-bye, beautiful people.